Yo, what's up you guys? Welcome back to another weekly market breakdown where we do take a look at the market from both a technical and a fundamental perspective. So without any further ado, let's get straight to it. Okay, so we are going to take a look at the dollar index, the NASDAQ, gold, and the Dow Jones. Remember that everything else that we are going to take a look at is negatively correlated with the index. So if we are expecting a bullish outlook on the index, then by definition we should be looking for a bearish bias on these other pairs as well. Let me know what you think of the camera quality. I'm not using the MacBook camera, I'm using the iPhone. So let me know if you guys think the quality is better, and let me know if you do think I should use it going forward as well. Okay, as you guys know, I am the Fastbull user. So if you do want to get in touch using Fastbull, I've made a full video how you can utilize it. I'm gonna pin a link in the comment section below. And that's about it. So last week we had the FOMC statement, right? If you click on the FOMC statement, it will basically open up and explain to you what it is and give you some minutes on what the Fed has said there as well. Now, I've said it before, you will not get information like this anywhere else, right? There's the minutes that says here, you know, basically what Powell had said within that minutes as well. You can even go into looking this, you can even go into the rate decision and you'd be able to see what the interest rates were for the past couple of months and back and forth, right? But let me not get you confused here. This is basically what the Fed did. They kept it neutral, okay? They kept it at 5.5. You can see here gold neutral, but based on the federal funds rate, it says here bullish for gold, and that kind of, you know, falls in with what it is that we are looking to do. But we are going to take a look at the dollar index and the price action that we do have there, because I do expect the index to continue higher, because we still have more room to the upside for the market to continue to clear as well. Now, firstly, if we do look at the price action, we can clearly see that we are trading currently in bullish structure. First, the market had broken above not only this structure, but it also broke above this structure. Both of these levels acted as support, resistance. Market broke below that, above that, came back, tested it as support. I do see the index continue higher, potentially getting us to this levels over here, because it's been doing quite bad. So we can see over there we had a market that broke above that. From here, what would I like to see is basically a move to the upside. Now, the way I enter the market is I use the same concept on lower time frames. So in this case, I would go on to a 1 hour or 4 hour, and I would also monitor the price action. Now, what does that look like? I go on the 4 hour time frame, then something like this is interesting to see, right? As long as you get the overall direction of the market correct, but because we have structure that the market is faced with there, what I basically would love to see is there's two places I would get into this market. The first place is there, or the next place would be there. Okay, same concept, just lower time frames. As long as you understand the overall direction of the market, then you buy at these levels in the market as well. Okay, always break even your trade if you've done some good amount of pips in profit, because you do not want to be like any of the guys that you thought can trade, right? Okay, let's look at NASDAQ. The NASDAQ is still stuck where we have first lost it, right? So if you look there, you can see this market basically broke above very important structure, but it hasn't gone anywhere ever since, right? So again, if you go on to lower time frames over here, you'll probably be able to see what's going on over here. You can see there the market has basically been moving, you know, sideways. I guess it would be good for us to first get a clear breaker structure in this regard. If we just move away from there, let me just clear that for you guys very quickly. So if you go just look at the current price action that has developed on this side, what we do want to see is basically a breaker structure from here. Right now, we can always argue about these wicks here as well, but the only way to get in this market is a clear break below, or a clear break above. Then on the pullback, we can definitely start looking for those longs or shorts, because you can see here this market has just been wicking out and then back in again, wick out and then wick back in again, right? Next up we've got gold over here, gold mafia. Yeah, once again I would like to see this market also just do something, okay, like do something. Yeah, I definitely expect a pullback, right? It's very easy to trade a range. You basically just trade it as it's moving. From here we need to wait for a clear break below or above, and I believe, where are we now? It's Wednesday today, Thursday. Do we have anything? We've got jobless claims, US, okay, we've got nothing that's gonna shake the market, right? Yeah, it's a good example of pure price action taking place over here, where a market that consolidated, right? Hi Borichi. Okay, we had a market that consolidated over there. We had a breakout of the consolidation, a pullback, definitely a continuation expected. We have an impulse. After an impulse, you expect a correction, and if you take the Fibonacci from the low to the high, we did get a 50% pullback over there. And then from here, the anticipation would be the -272, and that is kind of where I would like to see the market go from here as well. Guys, let me know your thoughts in the comment section below. Let me know what you are trading, what you are doing for the rest of the week. It's only Tuesday now. Please let me know your thoughts. Let me know if you love the camera view now, if the picture is a bit clearer. And that's it. Thank you for your time. And as always, cheers for the ears.